Friday, January 24th, market analysis. Stan Ehrlich, good morning, 10:08 California time. And we have a mixed bag today. No surprise. We've gotten overbought for the last couple of days, and generally we're still there. So let's take a look at the stock indexes and then look at the commodity futures. And sometimes I talk about other topics after that. I do have one particular stock at the end, XYZ, used to be SQ or QS, whatever, changed its symbol at the beginning of the week. Now it's XYZ, same stock. Anyway, E-mini. Now overbought Wednesday, Thursday, today, Friday. Today we have a slightly higher high. Now remember, since we're overbought, any bearish engulfing is going to generate a major sell signal, and that could drive prices down significantly because we also have the possibility of a bit of a double top formation here. We're up against the previous historical highs made, on the exact date of December 6th, or approximately the first couple of weeks of December. But we're there again, and we're overbought again. And this is exactly how double tops do form if it is going to, and there's no guarantee it will. But you got to watch for this. So I'm looking for a bearish engulfing, and if I find it, and I don't think I will today, but it's possible, we're going to get a major sell signal, and it has to get below yesterday's low in order to do that. Next chart is the 5-minute chart on the S&P 500, electronic S&P, E-mini. Now, we are slipping a little, and we're challenging the lows of this session. So we're probably going to slip off a little bit more. But the key here, again, is getting below 6102, give or take a little tiny bit. Next, we're also overbought on the SPY, as you would expect, and it has made new historic highs. Yesterday on the last minute rally, just barely poking its head up and staying there, and the bell rang. Today we have a little bit of upside follow through, but it's a dangerous territory here because any collapse getting below yesterday's lows is going to provide that big red sell signal that the ER signals is built to have when it believes we have a significant market turn. We also have three gaps to close at lower levels. First one down, 603, give or take a little. Next one down about 594.5, about. And the lowest one, I don't think we're going to get this low, at 585.25-ish. So those are the three stops on the way down if it does double top out here. Now, if it doesn't, and we stay strong, this could be very bullish very quickly, and that's just going to drive it into higher levels, overbought even more and more and more. But the difference is, after getting up substantially, let's say 620, 630 maybe, we'll have a downside correction out of the overbought condition, but only back down to about where we are now, the support level. So we're on the verge of either popping a lot or flip-flopping back down some. Next, S&P 5-minute chart, slipping, minor new low for the regular historical session in California. That's 6:30 a.m. to 1 o'clock in the afternoon. So we're dipping down some, down almost a point, pretty minor amount, no signals. Next, we did make it above yesterday's high slightly on the QQQ, and now we're a little lower on the day, but we're not overbought. So we're not, even if there is a bearish engulfing, which would be a little bit bearish, going to get a red ER sell signal because you got to have overbought conditions to do this. Okay, there's gaps to close below the market. Same thing on the S&P. I'm looking for the gaps to get closed, and that would allow for the possibility of a 510 move down to 510. A modest, nothing fantastic move down. Nothing super bearish about that. The problem is we do seem to have the makings of a possible double top. When we've rallied now, we came back up to this previous bull trend line, the bottom of an upper slanting wedge, perfectly on Wednesday. Stopped cold. After a little, do you think it's an exhaustion gap? It might have been. We didn't make any progress to speak of yesterday. Today we're giving it away. We're back to where it closed on Wednesday. And we're not too far from yesterday's low. So I wouldn't put it past a bearish engulfing. But again, no overbought. Can't have a red signal. Next, this is just a 5-minute chart on the QQQ, slipping down a bit. There's one of the gaps, the highest one, and there's the other one way down here. Okay. Now what about the NASDAQ futures? It can't get above the secondary highest high, which was made on December 26. The top of the NQ was December 16, first part or half of December. So a month or so ago, a little over. But now we're having trouble for the third day at a modest resistance level. Again, the high on December 26th. So it already had a higher high than yesterday, and it didn't quite make it above Wednesday's high. And it is almost low and last. And it could have a downside bearish engulfing, but it didn't get overbought. So no red. 5-minute chart. Slipping off fairly quickly at the moment. Yeah, well, it could develop into something interesting. On the downside, no surprise. Started talking about this on Wednesday, overbought conditions. Okay, what about the YM Dow Jones? Well, it's nowhere near its previous historic high, which of course was in early December or late November. In this case, November 29th. And it did come up to a previous bull trend line and stopped cold turkey yesterday, right at that line, and starting to dribble off a little bit at the moment. Now, I don't know. Did today's high at 773 get above yesterday's 757? Yes, it did. So we have the possibility of an outside down day if it can get lower than yesterday's low, which does not particularly look likely. You never know. Never turn your back on the market, especially if you got a position on and you have to monitor it without a protective stop. Then it's better. So YM might be starting a reversal. Remains to be seen. I don't think it's likely. Good price to do it at. And if it doesn't happen for a reversal, it still might start dribbling back down some. Next, and you're looking at the 5-minute chart on the YM. The Russell also having trouble at recent little highs here. And at a modestly important resistance area also. Right underneath, not quite touching, a previous bull trend line. A lot of similarities with these different indexes, as is not particularly uncommon whatsoever. So at the moment, we're down just a smidgen, and it could have a bearish engulfing, but like some of the other indexes, we didn't quite get overbought. So no red if we have an outside down day. Okay, let's go to bonds. Oh, I'm sorry, after the 5-minute Russell chart. And it couldn't quite do it on the rally, and it's dribbling back down, but it's not that close to the low of the day or the session so far. Bonds. Ladies and gentlemen, we missed getting stopped out yesterday of our long position by 1 tick, I believe. Didn't hit our stop. This morning, the low so far has been 112.17. Yesterday's low is, guess what? 112.17. Guess what? The stop didn't move. There was no upside progress in our favor to warrant moving the stop up for today. So today we also missed getting stopped out by 1 tick. Now, I'd like to say that was done on purpose, but it's pretty much a coincidence. The on purpose part was the way that the market is moving my protective smart trailing stop STS up over time relative to the price movement, relative to a few other features, and those are secrets. But you've seen this innumerable times. I've been doing this every day for over 2 years now. There's 500 and some recordings. We got a buy signal smack dab on the bottom of the market on January 14th. got long the next day on January 15th at the low of the exact day, 111.30. We still have that long position. This little green line, the straight line upward slanted, is what's called a trade line. It starts where you get in a trade and it stops where the current tick is. And it goes up and down as the ticks go up and down, and it shows you where you bought and where the market is at the moment. And if it's green, it's a profitable trade. If it's red, it's a losing trade. So, looking good. Just dodged a bullet here so far. Up 7 on the day. I'm optimistic. I am bullish on the bonds because there is a possible 2-year double bottom. It's not the best one I've ever seen, but we did get a buy signal back on October 23rd of 23. So that's 24, 20, well, a year and a half double bottom. Okay, not quite 2 years. And another buy signal on the exact low only about a week and a half ago. Is it going to rally like it did from October 23? Well, I can't say no. I don't think so. That was a heck of a great rally in a 2-month period of time. This time, I don't necessarily think that's going to happen, but you never know. Okay. On top of that, let me point out that the bonds may have developed or is developing the last low on a small head and shoulder bottom. I've detailed the same formation in the notes you'll see in a moment, but I think there's a chance this low, bullish engulfing air buy signal on December 26th is a shoulder, came up for a few days, topped out, went down to a new low, had a buy signal on the bottom of the market on January 14th. Come on, 2 turning points in a row. Went up a little bit and up close to where it was before at the rally high, and that was December 31st. So this is just December 21, this Monday, and topped out, pulled back a little bit. Now the shoulders are the shoulder is a little bit lower, but no big deal. The neckline is downward slanted. The whole pattern slightly downward slanted. That's very, very normal historically. But we are right about the right timing, almost to the exact day. I think tomorrow would be the exact day for the last shoulder low. I hope it doesn't make lower lows to stop me out, but it might. If it doesn't, we just missed getting stopped out on the last shoulder low of a head and shoulder bottom that has a minimum upside objective for this relatively small to medium sized pattern. The upside objective should be at a minimum of about, okay, 117.5. Not bad. Seen better, but not bad at all. If we can stay with the trade until then, or even more, we bought the low day on ER1 overnight and the low tick the next day, for the whole day, the low tick on the opening for this particular head and shoulder bottom, if it ends up being a good pattern. Let's look at the notes. So I put little marks at the bottom of each of the shoulder. Unfortunately, we didn't get a buy signal on the head of the notes at the bottom there. This is the marking for the last shoulder. And again, tomorrow is the idealistic last low. This could make a minor new low. We are up a little at the moment, 8. It could have made yesterday the last shoulder low. 2 days early is no big deal. And we could be on our way up. Head and shoulder patterns are my favorite. I've seen thousands of these things, literally. Read definitions of them in many different technical analysis books, by the way. I'm in 20 of them. And, I have my own little twist on it, but basically it's the same as what you mostly read. Some of them don't seem to quite fit my expectations, but whatever. I love this pattern. There's cycles, there's symmetry involved. There's in a couple of different ways. There's the ability to measure the objective, and there's some very hard, fast rules that it has to have working properly. And there's some leeway to some aspects of the pattern. It's probably the most complicated of all. It's great. I love this head and shoulder top or bottom. Next, we have a downside retracement in progress as I thought would develop. And you can go listen to my recordings a week ago. We got overbought. We got close to resistance. It's a good place to stop rallying, which it did. I didn't get a reversal or a sell signal, but here we are getting down a bit more on the RSI, but not very low. Can't use that. But I think this line, the previous bear trend line, which was the top of a gigantic pennant formation, which was in effect for, darn near 2 years, is going to get tested. So I'm looking for about 73 next week, maybe a hair under. So let's see what happens. We might even get oversold when we get down there. I don't think so, but if we get back into the pennant, I'm still looking for it to hold someplace, maybe 71.40, and start to go right back up again. I'm long-term bullish, intermediate-term bullish, but short-term, I don't think this correction is quite finished. And the statement stands almost exactly the same for the heating oil, which at the moment is up a little on the day. Have we made a low? I can't really tell. We're nowhere near oversold. We're not particularly at a significant, well, not bad actually, but it is a little bit lower support level. So I don't know. Maybe it's turning up, but I do think intermediate to longer term very bullishly about the heating oil. Next, natural gas. We had a sell signal that did not work on Tuesday. Wednesday, it ran right through the top of Tuesday, killing the signal. Followed through yesterday a little bit more, but back up into resistance and now starting to turn back down. Do I see a pattern for the top of this market starting on December 30th, when finally on January 13th, it reached its upside objective on a head and shoulder bottom, which was a combination. The head was a head and shoulder bottom all by itself, which worked damn nicely in 4 days. That was a precursor to the head of a larger head and shoulder bottom, a little lopsided, but all the body parts are there. And its neckline breakout on December 24 created an upside objective of 4.336, which got fulfilled just a couple, 3 weeks ago on January 13th. Now, that's it. It's also a resistance area. It's also gotten overbought at the time and reached its upside objective. And now I think there's a chance that this is a shoulder high. Yesterday, I'll draw on the little neckline real quick. It's always the lowest low between the first shoulder high and the head of the formation and across the pivot point, which would be right about there. Quite upward slanted, a little more than I would like, but still feasible. Timing measure from here to here and from here to the same number of days to the right. And that looks pretty symmetrical. It looks pretty good. I might be off a day or maybe 2 at the most, but look good. We're already coming close to the neckline. We'll see what happens to this formation. Keep going now. Gold has broken out of a pennant formation. Prior, it was a bull trend. Pennants are usually continuation formations of the previous trend, which is bullish. We broke out earlier, late last week. We have 2 different objectives in mind. One was measured for the beginning of the staff of the pennant, which I used July 25th. You could have gotten a little bit more bullish and measured it off that low on June 26th. I won't change things too much. That produces an objective of 31.14. Or measure from the beginning of the pennant itself to the back of the pennant, still vertically on the same day. And I started at about this point, right about there. And that is the measurement line. So it is a little bit lower, 29.87, let's say. One way or the other, it's a pretty good move, and we're well underway. Today's the first day it got overbought. Barely. We haven't really had a profound retracement back to the top of the pennant, which could still happen. We could dribble back down to around 26.90 to 1 next week, but not lower, but maybe not as low as that. Turn around and make new highs. The overbought condition causes me to believe that we have some minor downside correction about to happen pretty soon. maybe new high still. Remember, we're also real close to the highest high for the trend, which was October 30th at around the price of, we'll say 28.26. So maybe it'll hit that and then turn down. Next, silver, not the same story, but reasons to believe it could slip back down some more. This is the third day out of the last 7 where the high of the day is basically right on the same damn line. So this bear trend line, which is the top of a downward slanting wedge, has obviously proven itself in the last week and a half 3 times. Today, Wednesday, and the 15th or 16th was the 16th of last week sometime. So what am I looking? What am I going to look at? Another test of support, 30.15-ish, maybe a little bit lower, maybe 29.44. But I'm still long-term bullish. This pattern usually ends up breaking out to the upside. So intermediate to long-term bullish, short-term, maybe a little bit more of a dip. Next, platinum, a little different story. Huge long-term support area, kind of like the Russell Index. Back and forth, many different times in a broad area, but basically a zone, and bottomed out again and again and again and again the last couple of years. Now, platinum has had a lot of trouble making higher highs since May, spring of this year. Well, last year I meant 2024. And therefore, any major attempt to make new highs has failed, stopped at or a little bit above a resistance level, and challenged the bottoms. So that kind of changes the story here. We're between a rock and a hard spot, and you need a big, big rally for a major breakout to the upside or some sort of significant bottom. And the major support area could be it. I think we're going to test support again, but I'm watching very closely how it handles prices down below 960, down to about 910. Next, we've got high-grade copper. Sell signal on the top. Sell signal on the top. Sell signal on the top. Oh, we missed it. Overbought, yes. Overbought, yes, but no signal. That was a profitable one. It didn't make much money. Buy signal almost on the bottom. Buy signal on the bottom. That one didn't work very well. What have we got? The last signal on the top, coming down great, but we did get bumped out of the trade, made some money yesterday on the rally high, about the close and the high of the day. More followed through earlier this morning, but it doesn't seem to be holding very well. I'm still bearish because of the signal, and if you had used a, excuse me, slower, smart trailing stop, you wouldn't have gotten stopped out of this, for better or for worse. Keep in mind that at today's high, you would have a break-even trade at best, maybe even a little tiny bit of a loss, but right about where you got short in the first place. I don't like that. I would have at that moment given away all my profit and risk it keep on going up. And that would have been stupid in the end, losing trade after I had a profit of a pretty good amount. So we're out, took a profit. Great. No problem. Don't look back, cry over spilt milk, etc. Next. I'm sorry. Copper probably coming down to about 410, 411, 4.10, 4.11. Maybe a little lower, but something in the area where it's bottomed out again and again since August. Next, we got soybeans, oil, meal, corn, wheat, cattle, hogs, and that stock XYZ. Okay, beans, a little bit lower. I'm talking about a major long-term bottom formation. I think it's going to maybe turn out to be a broad double bottom. We need to start closing above 1081. Which was basically the high on September 30th, in order to say, yep, double bottom, past tense. Upside objective minimum would be 1187. And if it's a broad double bottom long term, it'll go one heck of a lot higher than that. Keep in mind, beans are coming down from a heck of a lot higher just in the last 3 years. A nice sell signal on the top of that move. A bottom, not too great. That's great. That was flat out wrong. That's a buy, and it turned out to be a high instead. Good buy. Okay, sell. Not great. Some really good signals in here. The point is, we could easily get way back up to at least the upside objective of 1190, but maybe all the way up to 1380-ish. Next chart, oil, bean oil. We got a minor amount of support tested Monday, Tuesday, Wednesday, and Thursday. Monday was the holiday this week. And I'm sorry, this is Friday today. So it was Tuesday, yeah, Wednesday, Thursday, and today. Sorry. Almost the exact same lows, right smack at my support level. Now, we're not oversold, not even close, but that doesn't mean it won't turn around at support and start to rally again. We do have, in my opinion, the possibility of a lopsided head and shoulder bottom. The neckline does slant up slightly, not too badly, and the minimum objective here could be 61.22. 61.22. Soybean oil is trading around 45 now. So that would be a huge move and a pattern to support it. Not the greatest head and shoulder. It's lopsided, but the body parts are there. Next, soybean meal has a triple bottom maybe. When it did make new lows completely on November 19th, it was only for a day and a half, so to speak, and it popped right back into this support area and didn't look back. Went straight up to another resistance area, came back to support, turned around, challenged resistance, and today dropped down sharply. But we're momentarily between a rock and a hard spot. I don't know how long this will last, maybe a week or two or three, but I do expect it to break above 321 and start a larger rally to break the long-term bear trend line. And I'll make some longer-term upside measurements to see how high is high from this potential long-term bottom developing, I think. Next, we did have past tense a head and shoulder bottom in corn. Great. It worked like a charm. Shoulder low, buy signal. Head of the formation. These two lows, I think, are exactly the same price. So there's not even a bullish engulfing, but so close. And it wouldn't have been a buy signal because it was so close to being oversold, but not quite. So that was a double almost. So here we have a bullish engulfing at the bottom of the second shoulder. That's 2 out of 3 pivot points for this formation. It went up to the neckline, stopped at overbought, says not yet, came back down, went sideways for about a month, frustrating, but didn't kill the formation. False breakout, but it didn't come down too far for too long. And then we finally have a legitimate breakout on December 24, right before Christmas. False sell signal didn't work, didn't even quite come back to the neckline, which would have been just fine, but it approached it pretty close and exploded on January 10th to the upside into resistance, stalled a little bit, still overbought for another 2 weeks now. And yesterday, almost had a bearish engulfing, but it closed significantly higher, not lower. But it did qualify for, I probably mentioned, a bass-backwards reversal. I don't know how to handle these things. I've seen them happen a lot. I'm not quite sure how to put on a trade based on the signal. I sure as hell know how to do it when it's closed lower. That would have been a red bearish ER sell signal, and my code does it all automatically. Next. Oops, I jumped too far. We're looking at wheat. Broad double bottom from the low, which was a buy signal on August 27th. Hey, you don't believe me? Go back to the August 27th recording or the 28th, the next day. Remember, the reversals could have happened after the YouTube recording the same day, so it wouldn't have turned green when the recording was being made, which oftentimes it does. So I would definitely mention it the next day. Now it's a broad double bottom. We just need to start going up again and make new highs. And it can't go into new low ground. Next, way up for the last 3 days in cattle, overbought finally in cattle, probably close to topping out. This was basically a very large flat top right triangle. The highs were all clustered about the same price going back to September of 23. So in 24, we came up to the same level, twice topped out, basically 4 times topped out, and approximately once or twice more, including a sell signal when it tried to break out to the upside and then came back down in the but most of these lows during that same time frame were a low, then a higher low, then a higher low, and a little double bottom, and then a higher low, and again and again. That obviously defines a rising bottom, no matter where you put your line. You could have raised it up here maybe a little bit, but that's the proper one. So how high is up? I haven't measured it yet, but you would take the top of the pennant, the flat part, the beginning, and measure how many points, dollars, whatever you want, down to the lowest low here, and then take the breakout level, which looks legitimate, but it wouldn't matter too much. It's pretty flat at 12:30 the date and 191.40, and measure straight up the same amount, that amount, the back of the formation. It's quite a bit higher, way higher. I'll get to it next week. Hogs support holding pretty good now. So it bounced out of support Wednesday. Thursday, today, good. New high for a couple days, probably a new high close for a couple, 3 days. I want to close above 90.95 in order to be a little more convinced that this is going to start making new highs for the trend. But I don't think that's going to happen. Why? There's a head and shoulder top. There's your first shoulder high. There's the head of the formation. There's the second shoulder high. And the second shoulder high is really the retracement back up underneath what was also a upward slanted channel or wedge, inside of which we had formed the head and shoulder top. So that's really a formation in a formation, sort of. The minimum downside objective is still in the support area down to 81.50. And I think we're going to go to 81.50 first, then up to get to the minimum downside objective on the head and shoulder top. It could start to ruin everything if it does start to rally above 90.80, and then I'd have to turn minimum neutral, if not bullish again. Next, we've got this stock, XYZ. It used to be called SQ, I believe, or QS, one or the other. So we're testing a bear trend line. Wednesday, stopped, came down, went back up again today. I think because it has fulfilled its downside objective on a head and shoulder top, first shoulder November 21, top of the market on December 5, last shoulder high, all in one day. The last shoulder high was December 18th, came down to the neckline, broke the neckline, classic major downside breakout, big, huge down day, made new lows for over a month on that same day that the shoulder high was formed, had a bearish outside down day, and a major breakout. Also getting halfway down to its objective. That was a huge day. You had to be watching at the time. Came back up underneath the pattern, which is okay, and then went all the way down to its minimum objective a couple of weeks ago. Done, fulfilled, head and shoulder top, worked, fine, went a little bit more, bottomed out, and here we are pushing the bear trend line. So pattern is over. Kind of looks like a zigzag down situation in a downward slanting channel, sort of. I don't think across that low and that low is going to be parallel, but it's close. So up and away very soon. Next, back to E-mini. Okay, come on. There we go. And yeah, I'll go to the 1 minute. Okay, we've made minor new lows. We're dribbling off a little now, 1.5 lower instead of a point. So, minor correction could be beginning. I talked about overbought conditions, double tops, resistance, and I'm not bearish. I'm just a technical downside correction in a longer-term bull trend. You guys have a great weekend and profitable trading to you.